In my opinion, Bitcoin's volatility is a feature, not a bug. It's an alarm bell for hyper-Bitcoinization. Back in January 2019, I wrote a Twitter thread on this exact topic. At the time, the price of Bitcoin was at $3,500, down 82% from its all-time high in 2017. Fear in the community was high, and I remember many people posting charts and suggesting that Bitcoin was about to drop from 3,000 to 1,000 for a final wipeout. Many people that learned about Bitcoin in 2017, like myself, were concerned. We rode the 2017 bull market to a very short-lived peak of almost $20,000, and then we watched as the price of Bitcoin collapsed for a year straight in a brutal bear market. Like I said in 2019, I think Bitcoin's extreme volatility is a feature of what we call hyper-Bitcoinization, or the monetization of Bitcoin. If Bitcoin was growing at a compound annual growth rate of 100% over the last 14 years in a perfect exponential line, what would happen? Well, speculators would see the price action, catch on, go leverage long, and short-term unsustainable bubbles would occur. And that's exactly what happens. Historically, Bitcoin does crash 70 to 90% in deep, dark bear markets, but these bear markets all occur after massive bull markets where the price went to unsustainable levels really fast. And this has happened 7 times or so at this point. This is a repeating process that has been occurring for over 14 years now. Why is this occurring? Well, Bitcoin is the best money, but almost nobody understands this quite yet. The bull markets bring in network effects like new exchanges, more financial products like ETFs, and most importantly, more long-term savers, anyone that has started to adopt Bitcoin as a tool for their personal, corporate, or government savings. But not everyone understands Bitcoin when they make their first allocation. Most people buy Bitcoin in a raging bull market, not comprehending what exactly they own. Then once the current adoption cycle dies down or gets too overextended, the price falls back down 70 to 90%. Of course, this volatility frightens people who don't know what they own. Bitcoin itself never changed. Its monetary supply schedule is immutable and perfectly scarce. It's still portable over the internet. It's still divisible into 100 million pieces, and it's still censorship resistant. But the short-term price changed enough to shake out the weak-handed holders. This means the bear market itself is what sets up the next bull market. An 80% drop in price does 2 things. 1, it wipes out all of the weak hands from the Bitcoin market as quickly as possible. The only people or entities still holding Bitcoin at the bottom of a bear market are what Trace Mayer referred to as the holders of last resort. Individuals that recognize Bitcoin is objectively the best form of money due to its superior monetary properties. And 2, the price drop enables these holders of last resort to buy significantly more coins off the market since the market price is significantly lower. So eventually supply completely dries up. Demand from the holders of last resort DCAing into Bitcoin is enough to begin moving the price higher, and soon a new bull market begins and another wave of adoption starts. This is the nature of Bitcoin's volatility. You have this cycle repeating over and over again. Bitcoin itself is not changing at all. Like I said, it's still objectively the best form of money. Its fundamentals are the same. The price just oscillates depending on where we are in the current adoption cycle. And the downside volatility plays a critical role in moving coins into the hands of the strongest holders. But now I believe there's a new feature of Bitcoin's volatility that's been discovered by Michael Saylor. It's the convertible note Bitcoin acquisition strategy, where Michael gets to borrow money at nearly 0% interest, buy Bitcoin, and sell additional equity at a price higher than the current share price. This enables MicroStrategy to perpetually increase their Bitcoin holdings per share with low risk. And what enables this? Bitcoin's volatility. Who would lend $1 billion to MicroStrategy at close to 0% interest? Well, someone who wants some of the potential upside of Bitcoin while having the protected downside of debt. This convertible note is effectively a call option on MicroStrategy with downside protection. And why is the call option so valuable? Well, it's because of Bitcoin's volatility. A volatile stock results in a valuable options market. So in a way, Saylor discovered some sort of black hole in our hyper-financialized financial system that enables him to monetize Bitcoin's volatility and perpetually acquire more Bitcoin in an accretive manner for shareholders. What does all of this mean? I don't think Bitcoin's volatility is going away anytime soon. And I think this extreme volatility only creates opportunity for those that already recognize Bitcoin is simply the best form of money and that we're living through the early monetization of Bitcoin. Thanks for watching, everyone, and see you next time.